Okay, today we're taking a look at UP Finance, also known as Unified Principal Finance. So what is UP? UP is a perpetually appreciating asset. In essence, what that means is it's 100% backed by a stable coin, in this case BUSD at the moment, and it can only ever go up. So very similar to how we looked at hybrid finance, how Defiantly works. In essence, money as you deposit it gets partially put into a stable fund and then partially into an investment fund. That stable fund only ever goes up, only ever gets added to via the investment fund and other revenue generating sources. So their ultimate vision would be to create an ecosystem that encompasses many trusted projects and protocols and providing services and solutions that facilitate integration with traditional finance and mainstream markets. So in essence, we're seeing this a lot in crypto, especially with the collapse of a number of coins that are traded on the open market, where individuals want to create a space where you guarantee that a project will never depeg or would never lose its value. And that's what UP is trying to do. In essence, create that stability in a very unstable market at the moment. All right, before we get into the details, just a quick disclaimer. We are not financial advisors. You should not take any of this as financial advice. Any content on our website, social media, or videos are for educational purposes. And as with everything, we strongly suggest that you conduct your own research and seek the advice of a licensed financial advisor where necessary. With any investment you make in any project, especially in crypto, there are risks involved and there's no guarantee of success. So please do proceed with caution. Okay, so the project has three main founders. So the CEO, also known as NB, the president, Jason Baxter, and the COO, Andrew, also known as Coach Andrew. And let's take a look at that in a bit more detail. If you go to their docs, there's a section for Meet the Team, and you can see the founders. What I really like about this is there is a picture, so a kind of face to go with the name, and a number of their founders are using their full names, so they're in essence doxing themselves, at least partially. So you can look up their history on things like LinkedIn and whatnot. And so these are the three founders. They also have a core team of a number of people, a chief marketing officer, an engagement manager, community manager, or multiple community managers. So they do have a team that's fleshed out. Similarly, they also have a active Discord, which I will put the link in the description for you to get more details about. All right, so how does this token work? What is the protocol all about? What are the tokenomics? Well, the very first process is minting up. So when you mint or you create the token and generate it, there is a variable 2 to 5% fee, initially set at 4%. So they, in essence, are setting that fee based on market conditions. Similarly, when you redeem up or when you sell it to get back BUSD or whatever is backing the token, there's a 2 to 5% fee, and initially that's at 5%. So that's kind of the buy and sell fees associated with it. It's interesting that they're using a variable fee based on market conditions. Um, we'll look more into detail when they release their contract for their exchange. Right now, that is still being developed, it looks like. Then two other important notes with regards to tokens. There is a pre-sale. It started on December 5th and goes until December 15th for the NFT. And then for their token, it goes between the 15th and 17th. So as we get closer to that date, we'll review the token contract. And so that brings me to the NFT, the fourth component. In essence, for the pre-sale, you have to own an NFT. And as a result, when you own it, you'll be able to mint a certain number of tokens based on how many NFTs you own. So let's collapse this a minute, and we're going to take a look at how the tokenomics work. Actually, let's take a look at the NFT side of things. Okay, so under the pre-sale and launch details, you can see there are different tiers. So if you own one NFT, the multiplier is 1. So in essence, if the user holds one NFT, they can buy 200 maximum UP tokens in the pre-sale. If they own 100, then their multiplier is 5. So in essence, 100 times 5 is basically how many tokens they can get times 200. So it kind of gives you the ability to buy more up as you kind of go up in the tier. So in this case, if you had 100 NFTs, you could actually buy 100,000 up. Where if you have one NFT, you can buy 200 up. So that's an important aspect. Once the pre-sale is done, that requirement won't be in place. And I think really the reason that they're doing that is twofold. One is that when they first release this, the token price will be $1 for pre-sale or $1, 1 BUSD. And then after, they're going to have a 10% increase. So at launch, it's going to be $1.10 for the public launch. So that's one kind of key difference in that. Okay, so where are all the fees going? So when you mint and you redeem, there's a certain fee. As I mentioned, it's a variable fee between 2 and 5%. If you mint, 0.4% goes to the NFT treasury. So when you hold an NFT, you get 10% of the overall revenue of the system for the lifetime of the project. So in essence, if you buy an NFT for 200 BUSD, whenever a mint happens, 0.4% of that mint goes to all the NFT holders. And then 1.6% goes to the backing treasury, so in essence supporting the token. 1% of that fee will go to the investment treasury, so to kind of invest in things, and we'll talk about those in a moment. And then 1% goes to the protocol treasury for new development. Very similar metrics for the redeem fee, but because the redeem fee is based off of 5%, where the mint fee is 4% initially, they're just a little bit higher on the redeem fees there. So that kind of gives you an idea of what the fees look like on the protocol. All right, so investments right now look to be minimally defined. At a minimum, they are investing in WarFi bots. So if we go back to the team, the president, Jason Baxter, is involved in the WarFi ecosystem. So that's probably why they have a partnership with them. And so they're investing in WarFi bots. Basically, they're taking the proceeds from the NFT mint, then also from the treasury, um, the investment treasury here, and they're putting into WarFi bots. So WarFi, I'll do another video on that, but they have had relatively successful history that is kind of based on Shining Jekyll's um, trading bots. And so we'll also do a video on that. In addition to WarFi, they do plan to have future engagements. It sounds like they want to engage with the community for other investments and strategies. So they're holding off on deciding the exact partnerships until I guess the project gets off the ground a little bit further. All right, and with that, let's take a look at the dApp. So the dApp at the moment is relatively simple. So right now, the pre-sale, they're just selling NFTs. Later, you'll be able to exchange the up token for BUSD. But since we are still in the pre-sale and not even at the token pre-sale yet, their dApp is relatively simplistic. So it's basically a single pager here. You can click on approve button over here once you've connected your wallet, and then you click on mint. You can select how many NFTs you're going to mint, up to 50 per batch. And an important note is that if you use a referral link, the price of the NFT goes from 200 BUSD to 180. So definitely take advantage of some of those referral links that are out there because you get a discount on that. So this is a bit confusing. Right now there are 2,600 minted NFTs so far, not remaining. So there's a fair amount still available, but there's 2,600 or so minted. Shows how many NFTs you own. So right now I have one in my wallet, and then my BSD remaining balance. So basically, you just click mint here, and you can go through the normal process to mint the NFT. They do show the referral leaderboard, so you can kind of get a referral code for any of these individuals as you like. And then finally, at the very bottom, there is their Twitter, Discord, and documentation. And the docs are also up here as well. So definitely take a look and read through these the documentation to get more info about the project. Right, so the code portion of this video is going to be relatively short. It looks like they're still developing the token, so that code is not available publicly. So we're just going to take a look at the NFT just to see what that looks like. The NFT token, or sorry, NFT contract is relatively straightforward. Let's actually first take a look at the contract up here. So this is the NFT collection. When you access this, you can look at a couple things. So right now there are 377 holders, and you can actually see the details here about who owns how many. So some have upwards to 100, all the way down to only a handful. So it's kind of a good idea to see how popular this project is. As with any contract here, you can actually read the contract. So if I go to the read information, I can see some information like what is the total number of NFTs that they're supporting. It looks like there's 10,000. One important note, if we go back to the project here, once the pre-sale is done, they're going to stop offering these NFTs and then kind of burn the rest. So you definitely want to get in early on those. So from here, the maximum number of mints are just how many you can mint per transaction, how many have been minted so far. The contract is pausable, so right now it's not paused, but if they decide they can pause it. They do have a royalty address and fees. It doesn't look like that's being directly used from what I see on this one. Staking is not being set up yet as well. One of the interesting things about this project is that in order to gain the rewards, you have to stake your NFT. That's not available on the dApp yet. They're still working on that functionality. And that's about it. This points to the BUSD address. So that's all the read information. From a write perspective, generally you're calling approve when you go here and click the approve button, and then you're calling mint when you click the mint button. Those are the two main publicly available methods. Some other interesting things in here, they do have a mint promotional, which is only available from the owner. So the owner of this contract, i.e. the protocol, the founders, can mint as many NFTs as they want. I don't really see them getting a huge benefit from that unless they kind of want to dilute the rewards. So in theory, they can mint 9,000 of the 10,000 NFTs, and they're just getting a portion of all their own rewards. So that's one potential risk or thing to look for. Let's see. And then there's this withdraw native option. Again, only the owner can do that, which we'll look at in the code. But you can withdraw the BUSD amount that's in the contract to themselves, so to speak. So that's how they get the funds out of this contract. It's a necessary step, so it's not necessarily like a huge risk, but just it is an attack vector, so to speak. So let's take a look at the contract. First up, let's look at the mint method. So it's pretty straightforward. It passes the number that they want to mint, and then the reference number. So the reference number is this referral code. So each person has a referral code. For example, James Pelton is reference number 3. It checks if the minting has started yet. So this is just that flag in the contract. Sorry, under read. Minting started right there. Make sure that the quantity is more than 0, so you're actually minting something, but it's less than the max. And that is, the minted plus the total of the quantity is less than the total number of mints. So if we got to say the last mint, so there are 9,999 NFTs minted, and you try to mint 10, you would get an error. Transaction cost, again, it's normally the price, which is 200 BUSD over here, times the quantity that you're minting, unless there's a referral. If there's a referral, then you get it for the price minus the price divided by 10. So 10% off in essence, times the quantity. So definitely use a referral code to get that discount. It checks to make sure that the user has enough BUSD in their account, transfers the BUSD from the sender, so whoever's making the request, to this contract, or whatever the cost was. It sets the referral quantity, so again, that's the thing that shows in the bottom of the page here, numbers here. And then it calls this create NFTs method, which basically loops through for each number of NFT you want. So if you requested 10, this will loop through 10 times. And it calls create NFT over here. The to address, again, is going to be the sender. Since it's an NFT, it's a unique ID for each token. So that's over here, this minted, kind of quantity. And so each person gets a new token ID. If you look at the transaction that I ran to mint, you can see that my token number is over here, the 2606. So again, everybody gets a unique ID because it is an NFT, and that's kind of what makes it unique. Okay, so checks, the minted is less than or equal to the total. And then here it runs through safe mint, and then it emits an event saying that this thing was minted. We spoke about events in some of our other videos here, so you can take a look at those. Safe mint basically just calls mint with 2 in the token ID. Here, it does some code before the token gets transferred, the NFT, which happens down here. Basically, it sets the balance from your address, either plus or minus if you're transferring it or not, right? So like your number of NFTs gets incremented or decremented depending on what you're doing. Same thing happens when you burn, by the way. After it, does that logic, it checks if the token ID exists, if it's been minted before. It increases the balance of that user account. The owners, it sets the token ID, so the owner, the address of the owner for that specific token ID. It emits a transfer event. And I think this after token transfer is empty. Double check. Yeah, it doesn't do anything there. And that is it. So that's pretty much all it does for the minting. So the only other kind of method that I wanted to show in there that again I mentioned was something you have to kind of be aware of is there is a mint promotional. So mint promotional, it's doing a check and making sure only the owner can execute this. And then for each one, it's just calling create NFT. You notice there's no funds or anything transferred here, so they could enter whatever value they want and mint as many NFTs as they want for their own promotional purposes. And they do disclose that in the docs so that they have that capability. And then lastly, this withdraw native function. So here, basically, you say the amount that you want to withdraw. I think it's a BUSD. Yeah, I think it's a BUSD. Nope, actually, sorry, it's BNB. It's withdrawing. And then basically it requires that you have that amount, and then you basically just withdraw it to the address. So that's there. And that's pretty much it for the contract. It's relatively straightforward just because it is a NFT contract. There's not a lot of stuff going on or things happening. But like I said, when they do the token contract. We'll go into that with more detail once they start that pre-sale. Okay, so with anything, there are risks and safeguards in place. The one little minor thing I noticed is the approval. Sorry, the approval isn't capped. So when you go into their dApp and you click approve, it has some insanely large number of uh, BUSD that you're approving. That's generally not a safe practice. You should go in there and edit. So let's take a look at that real quick. So if I go over here, let me just switch to a different contract. Sorry. And I connect there and I click approve. You'll notice that the amount that is approved for BUSD is really high. That's somewhat safe and unsafe in case the contract got hijacked or things like that. Somebody could potentially go in there if there was like a bug in the code, and since you've already approved your BUSD, they can just drain your account for that amount. So I generally like to do a custom amount, and I'll just put the 200, whatever BUSD that is uh, required of a single NFT, and just do it that way. So just to be a little more explicit. The other risk is the airdrop process has not been developed yet, so getting the rewards from the NFT has not been implemented. There are details, like you do get 10%, but it's not in place yet. You don't have anything to prove that it works or that they're actually going to do what they say they're going to do. So that's one risk. Um, you have to stake the NFT to get rewards, which feels a little bit odd. Um, that's not necessarily a requirement for other projects like Horde, for example. So I'm not sure why they're deciding to do that, but that's a requirement. For the actual token itself, they're eventually going to trade on a DEX or allow trading on a DEX, so you can both buy the token from their dApp as well as trade it on the DEX. I'm not sure why you'd want to do that. I guess if somebody wanted to ditch their token for a cheaper price, they could throw it on the DEX, but again, that doesn't really make sense to me, unless they avoid some of the fees. So once we get to that contract, look at that in more detail. No audit has happened that I've seen so far. And the owner of the contract is not a multi-sig. It's just a single contract address. So we can kind of take a look at that. So if you read this contract and you find the owner, it's just a normal, kind of address that's not tied to a contract. So if this address got, or this, somebody somehow got the private keys to this uh, wallet, then there would be, it'd be a problem. The protocol couldn't recover, from that. So that's one, concern. But on the positive side, there are some safeguards. There are multiple owners. So obviously the multiple owners can collude together, but the idea is that if there are multiple people, it's harder to kind of hack something, especially if a number of them are honest and they eventually have multi-sig. That would be useful. Also, they're involved in other projects, so they're not going to want this project to fail because then people will lose confidence in the other projects like Warfi. So that's another kind of safeguard or something that you should be concerned of. So credits again. This slide was created with SlidesGo. Very cool project. It creates some nice looking slides and icons and things like that. So take a look at their templates. Um, but anyway, in general, I think Up Finance sounds like an interesting project. They have some things you should be aware of. You have to have fees on the buy and sell. There are a couple of risks and things like that. So definitely do your own research and take a look at the contract. But that's a summary of Up Finance. If you have any questions, throw them in the comments. I'm happy to respond to them.